Welcome back, everybody. Let's have a look at some of these coins then, shall we? We'll start with Bitcoin. We are going to look at XRP as well, and I'll make some other videos on other coins, and if you've got other ideas that you want me to have a look at, some other coins, just let me know and I'll have a look at those for you. But first of all, we'll just have a brief summary of what's been going on this week and really what the actual deal is. So in summary, Bitcoin is obviously a chart worth looking at to work out the health of the crypto market, and so is XRP for XRP's health, but really the main driver at the moment is the dollar, and the dollar has had a pretty nasty impact on traditional markets, and not only that, traditional markets look like they've been overbought. So let's have a look at the Nasdaq, for example. So this is obviously the big dump that we had in March, along with crypto market, and then recovered to make basically new all-time highs. So what's happened here is that we're having big sell-offs, and the sell-off so far is 11.5%, so that's a big deal in a traditional market. You don't really, I mean, you do get sell-offs. I mean, this was a big one here. You do get them, and this one, of course, here. So you do get big sell-offs, but generally speaking, this is getting a little scary, and the reason it's getting scary is because tech hasn't really been affected. So the Nasdaq is what we're looking at here. The Nasdaq, is big tech stocks, and tech stocks haven't really been affected in the same way that other industries have during this entire situation. So for example, the airlines and things, and restaurant chains, and even just high street shops, they're all suffering because of a lack of movement, lack of the lockdowns. All these sort of things has affected their business. But with tech, it's not really the case, because tech, is software, it's technology, it's rolled out, it's given, and it's actually, you could argue that it's grown during this whole situation. So really, finding a new all-time high was fair enough. I could, I can accept that. But having this sell-off is a little bit worrying, because what I'm expecting is that it will actually continue, and most of it has been driven by the fear of the dollar. So the dollar has allowed for these stocks to recover, including Bitcoin and cryptocurrencies. The lower the dollar value, that the more aggressive the stocks and crypto rises, because pairing against dollar, cheaper dollar means more expensive, or the impression of a more expensive or more valuable stock or commodity. Because technically, if this is an example, right? If you look at this, right, this is almost the inverse of the charts that we're looking at. So this is the inverse of Bitcoin, right? So Bitcoin, yes, everything dumped, including the dollar dumped, but then when they introduced quantitative easing, what happened is the dollar just slowly decreased down and down and down. And we compare that to, let's just have a look at that on the Nasdaq. So the Nasdaq, we had everything dumped, and then quantitative easing kicked in, and then we went up and up and up and up and up. Same with Bitcoin. So we have a look at Bitcoin. Down, everything went down. Quantitative easing, everything went up and up and up and up and up. So what people are getting worried about is that if the dollar bounces from this level, this will go up. I'm not saying how far it will go up, but if it were to bounce and start to trickle up again, so increasing its value, then everything will trickle down again. That's basically the concept of how this is going to work if it were to happen. Now, it doesn't mean it's going to happen, and this even though it's made a recent higher high, and it looks like it's setting in a higher low, it doesn't necessarily mean that it's going to go up, but it might mean that we're kind of finding a base, which means that we're not going to have the aggressive moves up that we've had recently. Now, the dollar is basically, in many ways, and in every way, I'd probably say, controlled by the Fed. So that what we're doing here is we're kind of like trying to put our mind in their headspace. All right. So does America want to see, their economy trickle down again? Do they want to see that? No. But do they want it to continue to go up constantly? Probably not either. And I'll tell you why. It's because the whole economy, worldwide, in the Western world, is in a bubble, America especially. So America's got this economic bubble protecting them from the economic reality. The economic reality is looking pretty grim. The bubble is giving a different impression, basically new all-time highs and things like that. So the bigger the bubble, the bigger the pop is what I'm thinking. And the bubble will pop at one point. So will you want the bubble to make a big bang, or would you rather it just go and not be quite so bad? Probably the latter, I would say. If I was in control of this, I'd say, right, we've recovered, we've done all right. We're not bankrupt, we're not starving. We need to try and control this fall. We need to make this bubble smaller before it pops. So I think that's basically what's happening. I think they're slowly testing the water with the price of this dollar and seeing how bad it gets with these incremental steps up. So the incremental steps up, even though they've been very small, they've had a dramatic effect on the traditional markets. Bitcoin has kind of managed to stay out of that. I mean, yes, there has been sell-offs, I mean, definitely, and a lot of that's related to the chart in itself, but it's not immune to the way that traditional markets work, nor is it immune to the price of the dollar. So, like I say, I know this is all boring, you want to know about crypto, and we're going to go into that now, but that is a summary of the situation, and that is the thing that we're looking at. We're looking at this chart first before we look at anything else. We're looking at the Dixie. We want to see if it bounces. If it stays and goes above 93, then it's probably going to be bearish, and if it goes below 92, or should I say basically 91.5, then it's going to be mega bullish for everything. Stocks, commodities, Bitcoin, everything. So that's the deal. And actually, while we're on here, we're just going to have a look at the smaller term time frames to see how these are faring out. So this was looking a little scary before, and it kind of is still in the middle. So this is the 4-hourly chart, and you can see that actually there's been quite a tightening of these two exponentials, and that it has actually led to the price going above the 200 exponential, which means that was the first time that's happened since all the way back here, when the dollar was actually still quite strong, and that was back in May. So usually that's a sign that there is going to be a bounce. If we were to be held above there, that would be a sign, but we've been brought back down again, and like I say, I'm pretty sure that this is all planned and a controlled fall, testing the water to see how everything reacts to this dollar increasing in its value. In the drop of a hat, this can be brought back down, no problem at all, and stocks and everything will continue to rise in the nice big fat bubble that it's in at the moment. And it is a bubble. It definitely is a bubble. Okay, we don't. I think in many ways, because there's this whole idea of a second wave. I know there is where I am in the UK. It's and in Europe, and I think basically across the world, it's creeping up on us again. They're going to hold out the big guns for a second national lockdown, and the big guns will be to bring it down below this level. So holding the dollar at this value, dancing around at this value, is probably what I would imagine to be our short-term future. And if things get progressively worse worldwide, nationally, then they will bring it down even further. And it does have massive economic impacts in the long term to do that, so no one really wants that, but in order to keep the impression that everything's okay, that's the only real way to go about doing it. Right, so let's have a look at Bitcoin, shall we? So that's gone on for quite a while, sorry about that. I'm boring you to death with all this boring business. It's not, I'm not traditional click, I'm crypto click, aren't I? So let's have a look at some of this stuff. So Bitcoin trading basically flat here on the daily, not looking especially exciting at all. Closing candle bodies around this level, which is actually okay because we're above the 10 exponential moving average, we're above the green 50 exponential moving average. This is all looking okay. The MACD is actually looking okay as well, and the RSI is making higher highs and higher lows, so that's all quite good. This bit here doesn't look very good at all. In fact, this is the biggest, scariest part of this entire situation for me, and what I would normally say is that this is a sell signal. So even though the majority of this chart looks good, I believe that there is going to be a dump, and the dump is because this indicator here, this money flow index, does not like to get this high. And this is the highest read we've had on a daily since all the way back here. Okay, and that is a sharp increase on the money flow index. That would normally come down. That doesn't mean that there's going to be a massive dump. So let's have a look. We came up to this level around here, and we came up even further, and we tested that level again, and then we dumped right back down. That was a big dump, if I remember rightly. For a Bitcoin, that was a very, very big dump. That was 13%. It was more than that. It's just I haven't zoomed in properly. It was about 13% dump from top to bottom, and then buybacks kicked in, and we bought it all back, and everything was good and fine, and everyone was happy. But it did eventually come back down again. But the money flow index had also come down, so this was just going off the back of what's been going on with traditional markets. But the chart itself, the money flow index does not like to be a read this high. It hates it. And if you look back in history, every time we get a high read like that, we come down quite dramatically. So there's another example here, quite high, and then pushed it too hard, and then we came down quite dramatically. Let's measure that one out from top to bottom. Money flow index right at the top and back down 20% there. Where was the last time it came up to this kind of height? Roughly around this level here. It doesn't look too bad on the chart, but we'll measure it out all the same. From top to bottom, 10%. So you get the idea. So when we get high reads on the money flow index, it generally means that we're going to come back down quite dramatically. Here's another one, very high read, higher than where we are right now, I should say. But from top to bottom, we can bring it all the way down here. It's 24%, so on and so on and so on. Anyway, so we've got a high read on the money flow index, which means that it can go higher, and it often does. It often does pop and goes right up, and then just all the way back down again, quite dramatically. So I think that we're going to see areas of 10,500 again, but it also means that I think we're going to have a pop before we do that. Now the question is, if we do pop, how far are we going to go? Where's our top? And I think our top is going to be this level here, roughly in the center of this Ichimoku cloud, but it's also this moving average here, which is the 50 simple. And if we look at historically where this area is, and it's 11,250, does this have any confluence to areas of support and resistance recently? I think it probably does. So I'll measure that out. Roughly speaking, it's going to be about here. So yeah, we found sort of, I suppose, closing and supporting. So I think this is going to be the area where we probably try and push up to, and then get rejected from, and then come back down to this level, this blue box area here, about 10,500. Now that's okay, that's all fine actually. That's not such a big problem. But if we do close below 10,500, we'll be coming down to this blue box area here. So you've got to understand that there's targets above, and the market is against us. Unless the dollar significantly lowers in its value, it's giving the impression that Bitcoin as well as traditional markets are overbought at the moment. They've pushed very high, they've come up, and they've come a long way in a short period of time, but where are they going to go from here? Are they going to continue up? If it breaks above this level and closes above 11,250, then yeah, we can come up to this upwards level of support and resistance. So this one is a big deal, and I'll show you. We've gone through this many times, but we've been supported and rejected on this line for many times, and in fact it goes all the way back to 2017. So rejections, supports, rejections, supports, rejections, and then recently we spent a whole month getting rejected from it, and then finally gave in and collapsed down from it. So that would be the area, and it's roughly around 12,000 at the moment, but it is an upwards facing trend line, which is good. But basically that's the level where I would expect to have a problem with. So that's the deal with Bitcoin. So in short, I'm expecting a move up and then a move down, because the money flow index is very high. Unless we trade sideways for a period of a number of days now to allow that to go down, but it shot up really quickly, which means that I think it's going to go down, and there'll be a move up, but a bigger move to the down afterwards. Let's have a look at XRP, see how that transfers over. So XRP was looking relatively strong from these low areas, and actually had an up day when most of the things were down, but now it's it just cannot take it, can it? It just cannot take it. We're above most moving averages of short-term significance, I should say, but it's looking relatively weak. The MACD cross is okay, the RSI is creeping up, it's okay, but I imagine that on the short-term time frames, these probably don't look very good. No, they don't. So there's the opposite effect on the 4-hourly. The 4-hourly wants to come down. We've got the negative cross. It's not looking too great. We're clearly still playing out that death cross here. There's no golden crosses taking place on XRP at the moment. So I imagine it's going to come down a little bit more, probably to test those lower ranges on the daily, maybe around 23 at the lowest, and probably actually 23.5, which is where where the 200 exponential moving average is at the moment. That's probably where I imagine we'll come down to, and then maybe find another base and bounce from there again. But again, this ties into that with Bitcoin. So if Bitcoin decides to break down by that figure, come down to 10,500, yeah, we could see 23. We could even see a bit lower. We could see wicks below there. What we don't want to see is us break down beneath the 200 exponential moving average, which again is moving up at the moment. So every day that goes by, that support level is slightly higher than it was the previous day. But being below there basically means that we get stuck below there, and we have to have a really conscious effort to break above there. And I'll show you that historically, XRP has spent the vast majority of its time beneath there. So this is the white one, the white line here that we see. Once we're beneath it, we spend a lot of time beneath it. This was last year's big moves, so everything was being carried above there. But it didn't like it. It didn't like being above there for very long. And even when it came down to test it, it tested it a few times and broke down beneath it. So you get rejected, rejected. It broke above it here, but it came back down, rejected. So we don't want to be beneath it, and that would be the problem with this chart. If we go down beneath it, then we're likely to sink down lower, and then you use that area usually as an area to either sell pumps at or short the tops at. But anyway, that's the deal with these coins, and that's the deal I'd expect. So, like I say, as it is, the weekend traditional markets are closed, but the fear is that traditional markets are going to continue to sell off because it looks as though they're overvalued, especially when you work out, when you think about the Nasdaq shouldn't be selling off because tech stocks should be going from strength to strength, shouldn't be affected in any way. So we're really looking at this as far as the dollar increasing in value, a controlled fall from the Federal Reserve, and Bitcoin hasn't yet, but it is going to feel that inevitably. Bitcoin's like an afterthought for traditional markets. Traditional markets are the main thing. That's where all the money is. There's a very small amount in comparison in crypto for market cap in comparison to these mega stocks, these big indices where all the money is. So Bitcoin is, it's a very small afterthought, and a lot of people think it's a good place to hedge, and they might be right. If we go into a depression, for instance, I imagine Bitcoin will actually do okay during that period. So as far as the stock and flow ratio for Bitcoin is concerned, if world markets collapse and the world starts to really feel a depression, which looks like it could be on the cards, but I think that Bitcoin will survive that and actually might even flourish throughout that. But in the time just before that, in this moment where we're at right now, I think Bitcoin is, if the Nasdaq, if the drops and if the dollar increases, I think Bitcoin will follow those before it bounces from that. They're not decoupled. Everyone likes to think that they are, but they're not. I mean, they are tied together. And if you treat Bitcoin as a store of value, like gold, for instance, gold fell during in that pandemic, in that sell-off. Gold fell because it's a store of value. If everybody's losing their investments, you need to be able to draw upon your store of value. So it will feel that. Okay, it will definitely feel that. Anyway, I'm going to leave it with you there, and I'm going to make some more videos as well today because the kids are out, the missus is out. I might only have a couple of hours, but I will spend it doing this. Alright, thank you for watching. Have a nice weekend. Take it easy and subscribe.